Hi Dan, it's Trevor.
Hello there, Trevor. Can you hear me?
Yes, I can.
1 second, let me just make you the boss. Okay, make presenter. Yes. Okay, I can see you, but I can't see your screen.
Okay, you will in a second.
Here we go. Skype. There we go. We're looking at Euro USD.
Okay, brilliant.
Okie dokie. I think. 1 second. Okay, I think we're all ready. Are you ready to go?
I'm ready to rock and roll.
Ready, as always, Trevor. Ready to rock and roll. Okay, hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar window. I'm sure you all know how to do that by now. For those of you who don't know, the handout can be downloaded in the handouts tab of the GoToWebinar window, and I'm sure that you all know how to do that already if you haven't already done so. If you do have any problems downloading it, or if you're new here, just let me know in the questions tab and I'll send you a link. If you are new to trading, we do recommend that you use the handout, as it'll help you understand the different terminology that Trevor uses when he's talking about the charts, you know, what he's thinking about when he's using them. So for those of you that don't know Trevor, I'll just give you a brief intro. Trevor has over 40 years experience as a technical analyst and trader, something of a veteran. He's worked for large companies such as Merrill Lynch and Bloomberg, where he was global head of technical analysis. And he was also a founding member of the Society of Technical Analysts in London. Which is an institution which accredits other technical analysts. So I think with the introductions over and done with, Trevor, I think we can get started. Are you ready to go? As
I'm
always,
ready
you
to
are.
go. Yeah.
Please take it away.
Okay, thanks Dan. Welcome everybody. Please do ask any questions. Put them in the chat box as Dan said. But I like questions, and Dan will stop me at certain points when he thinks there's a good opportunity to answer your questions.
Certainly, don't be afraid to ask questions.
Yes, don't be afraid to ask questions. But we've got a lot to get through. As usual, we'll keep around about the roughly the same order. We'll start with the currencies, and then we'll move to Bitcoin, if you don't include it, call that a currency. Then commodities, including, of course, gold and Brent, crude. Then the stock markets, and then a couple of individual stocks as we've got time for them. So let's get cracking with the big one, the euro. What we had been saying in the last few weeks on the euro was that we had seen some bearish divergences occurring here. We've got high, 4 higher highs there, and we've got lower highs in here. So from this point here to this onwards, we had the declining momentum in the advance. That was not in itself bearish, but it did tell us that this impulse move here had lost power, and that's typical behavior when we're about to change direction. In the chart itself, we were forming a wedge. I drew this wedge in here. Here was the break point, and then we measured the height of the wedge here, and that gave that minimum price objective, which was hit on Friday. So we saw that coming, and we've should hopefully have participated in it. But let's get it in context. We've got to the minimum price objective for it. So what's going to happen next? I've gone to the weekly chart here. So every bar is a week. And this is really very important to get all this movement in context. One of the reasons that we thought potentially we could turn down in the euro was that we were approaching in this wedge formation, which is this little bit in here, this previous high back here in 2018. Very important and significant resistance level. And really, it was never really going to sail through that without some hesitation. And I think that's actually what we've got, is hesitation, typical hesitation at a very significant previous resistance point. So that means that I expect that we will pull back a bit as is normal, and then consolidate and advance again, have another attempt at it. It's quite typical behavior when you get to such a significant level. So we're pulling back now. The question is how far. We did come up quickly in this period here at the end of last year, and so it's not too difficult for the market to pull back much further. There's very, very significant support here at one. At one. Let's get it at the right level. Measure correctly. Sorry, at 120 here, and so I think that it will find its footing between here and 120. So, but we've got in the shorter term, we've got, before we get there, we've got more, still got support from this low. We haven't yet broken that. It's 120.66. It looks as though it will. If it does, then expect potentially quite a quick move down to this big consolidation area in here, where I do think that it will consolidate once again and then eventually push up and tackle that high again. So this is not unexpected here. How far down it goes, we don't really know yet, but it does look vulnerable to coming down to around the 119.5 level, where then the support is absolutely solid. Going to sterling now, British pound. I'm going to start actually with the weekly chart here, because we want to remind ourselves of where we are in the big picture. We had these very significant series of resistances at 133, 1, 2, 3, 4 since 2018. We cleared that at the end of last year and we powered ahead. But we were very aware of this significant 2018 double top here, which was resistance for the market. And at the very beginning of it, the low point here you see is 137.10. The high here is 137.09. That's kind of spooky, isn't it, here? So we knew where that was, where the resistance started, 37.10, and it got to 09, and then it started to pull back from there. So it's weakening a bit here, but I think it's still looking pretty good. It's in an up channel. This is now the daily chart that we're looking at here. It's in an up channel. It's midpoint in the channel. It's not threatening the bottom of the channel yet. So I think it's holding up well. And we have got, of course, this resistance point here. The spike top of it is at 134.82. So from there down to around 133.60 is quite good support, which probably will stop this easing back. So compared to the euro, for example, this looks less vulnerable from this strengthening of the dollar that we've got. Let's look at euro sterling. Something's gone wrong here. What is that? So it's the wrong, there we are. So what have we got here? So we've got this is euro sterling, and now here's the weekly chart of it. Now it's at a rather threatening point. So this is euro over sterling. So declining is euro weakening. Here's the weekly chart of it. I see this as a descending triangle. That's quite a threatening pattern here. And we're testing this lower level here, 1, 2, 3, 4 points, weekly points, very significant level here around 89 there, and it's being tested. We've got lower highs, so there's pressure on it. The oscillators are looking negative for it, and so there's a longer term perspective. Here we are here are those lows today. It's steadied up, finding support at those lows, but watch out. 88.80 more precisely is the level, or let's say 88.50 would be your confirmation that it's really given way. The move that can follow that could be very substantial. Of course, that's up for sterling, outperforming the euro. So watch out. We're at a crucial level. Could hold, make a fifth point, that's for sure. And we've still got those declining tops, which will mean that we'll meet that resistance at a lower level once again, and possibly turn down and challenge it a further time. But it's either it's going to go now or hold, or it's going to wait. But it is a bearish chart pattern. Going to Swiss franc now. I need to just remind you this big picture here, because we're being influenced by long-term pattern here, I want to give you a 10-year chart. So just to show you, we broke these levels here, we plunged from there. We're coming back to test some important support down here. It's right down here at 87 cents, and it is sort of run out of steam on the downside. We've seen this through the bullish patterns in the RSI, bullish divergence in the RSI and the MACD. So that's where we are, just above very significant support. But this looks a bit to me like a reverse head and shoulders pattern. So left shoulder, head, right shoulder, neckline across here. And this might be with bullish divergences going on in the pattern itself. So if we have a small move up from here, and really a small move up from here, we'll be breaking the neckline of the head and shoulders, and that would indicate we'll punch back right into this resistance here. It starts at 90, but the implication of the reverse head and shoulders is beyond 90, closer to 91, punching back into there. So I think potentially the US dollar could strengthen against the Swiss franc, which has been so strong against the US dollar and leading one of the leaders versus the US dollar. That does look as though this might well be temporarily on hold, but there are many downtrends and there's much resistance above to indicate this won't develop into anything long-term significant. But in the shorter term, there is a reaction move, I think potentially a significant reaction move about to happen here. So watch the levels there. You know, if it fails, it isn't a reverse head and shoulders. Now, Norwegian crown has been one of the leaders of strength, one of the best ways to participate against the weak US dollar when we had it. Now we've got some strengthening dollar, and I think that this is now breaking out of a channel. Again, I want to look at the weekly chart here and remind you that we've got a very, very significant level at 880.30 here. We're well below it at the moment, but that is what's above us here. So that's here, but it's we've got points further off to the left. We're in this downtrend channel. I think it's breaking up today, really today it's breaking up, and we should move typically the height of the channel upwards, which would take us up into that resistance level. Again, a retest of it from below. But it's such a significant resistance level, I think it will stop the advance. So this is really a correction move, but you know, it could be quite a significant one from here up to retest of this low here and the previous similar lows. So I think a counter trend move, if you like, in the Norwegian. So if you were looking for safety with the Norwegian, I think that you're under threat here now.
Trevor,
let's go to the, yes.
Just got a question. We just got a question. Yeah. 1 second, please. It's from Gregory Amos. Thank you very much for your question. Regarding the dollar, he asks, regarding the dollar strengthening, what is causing it? He seems to be, he's talking about riots and attacks in the US Capitol. It's hard for me to believe that something like that would strengthen the dollar. What do you think from the technical analysis perspective is doing the strengthening?
Well, I can only think in a technical analysis perspective, and I can see the dollar is strengthening. I think one of the big things is, more important than the riots and the collapse of democracy and all those sort of things that you can talk about, is the fact that US interest rates are strengthening. That means as an attractive proposition, it's increasing. And so your yield that you get in US dollars is increasing, and broken a big long-term downtrend there, and likely looks like it's a rather structural thing, and that we're in a new phase of strengthening interest rates, and that's having an effect. The other thing is that obviously the market's not me that matters what I think about riots and things like that. I'm horrified personally, but it seems like the market is much more interested in the reflation package and the relief about the new president and what his policies are likely to be, and the fact that he won't be able to raise taxes too much. And you know, it's difficult to predict fundamentals really and weigh them up correctly. But you've got a measure, you've got a barometer of that, which is the price. And the price tells you what everybody thinks of those fundamentals. So you and I may well be you know, it's impossible for the dollar to keep strengthening where it's got so much debt, and the debt is ballooning, and we've got rioting, you know, in the capital itself, and so it's impossible. It's not impossible at all. If other people, and that's who matter, not us, don't think those are very important things, then the dollar will go up. So that's just why I rather ignore the fundamentals like that, because I know that I personally, I'm not very good at weighing them up correctly. You know, I am horrified. I think the world should be too, but clearly it's not. You know, that's all that matters. There's no point in me saying they must agree with me. They will, clearly they don't.
Well, I hope that answers your question, Gregory.
Yes, I hope so too, Gregory. So this is why I'm a technical analyst. I think the fundamentals are impossible to analyze and weigh up correctly. And even if you do that, it really only matters what other people think. You know, it's you know, no one would ever buy. We'd never have a thing like Tesla if we thought only about fundamentals. Fundamentally, why should Tesla be valued at the same price as all the car companies in the world? Why should it be priced such that you're discounting 1,600 years of future earnings of the company? It makes no sense. But there's no point in saying it makes no sense, so it has to go down. It's not going down, it's going up. People are buying it. They love even Elon Musk. They love him more than common sense. So common sense is not a good guide to the price of things. Okay, so sorry. Good question, and good job. You stopped me there, Dan. I'm going back to the markets.
Excellent.
So Australian dollar now, we'll do the Australian and the Canadian. Here too, we've got some important moves, maybe interruption moves. So here's the weekly chart, the very big picture weekly chart. I've been very bullish of this, looking from the March low impulse up to here, pull back. I'm measuring this as a Fibonacci projection. We noticed, we mentioned last week, we'd got to the 50% level there. We had a small divergence in here. It wasn't strong divergence, but we had a small divergence in here. And so there was you know, we had got to a level where it could potentially weaken a bit, but it's a bullish pattern in my opinion. And so going back to the daily chart now, I had drawn this channel in last week, and we're breaking down through the channel now. So if I've drawn it correctly, today's action is a breakout of it. You see the bearish divergence here, and a milder one in the MACD, but a strong one in the RSI here, warning you into this high here at the end of last month and the beginning of January that we had lost power on the advance. So where are we going to correct? So I'd be heading for Fibonacci retracement levels. I'd be looking at this solid, what was resistance point here, 1, 2, we hesitated here, broke, pulled back, and then advanced from it. And that's a solid level there. And so let's put that as a floor, if you like, 173.80 there. But I think it will find its footing earlier than that. But in the shorter term, I think it's got more to go on the downside. It's overdue for a correction. It's just a correction there, not a change in the trend. There's nothing in that indicates that it's changed direction. So for many people, they'll see this move as an opportunity. Likewise with the Canadian dollar. So we've the Canadian dollar going down, it's the US dollar going down here, that's the Canadian dollar rising, of course. March low, A, B, C, projecting up from there. Once again, we got to the 50% level in this, and it is pulling back from there. So it's a natural place for it to correct. We had the bearish divergence in here as well. So what is it on the daily chart? How does it look? Well, it does look a bit short-term bottomy in the market. We've got strong, see here, low, lower low, lower low, 3 lower lows, and we can draw this uptrend line here. So there was a strong warning from the RSI and the MACD as well that we'd lost momentum on the downside, and so we're steadying up here, not surprisingly. But I don't think this is going to amount to much at all. So there are many resistance points and the long-term trend is so strongly down for the dollar and up for the Canadian dollar that I think it will reassert itself at some levels slightly higher than where we are now. I wanted to just mention the New Zealand dollar as well. It's one of the leading, good ones, if you like, to be in versus the US dollar. So one of the leaders, one of the best relative performers. Going to the weekly chart here, again, I keep going back to the March low, A, B, take the length of AB, add it to C, which is here, and we go up here. We went just a bit beyond 50% here, but crucially into this resistance back
Trevor,
from, yes, indeed.
we're looking at New Zealand dollar, Japanese yen here, not dollar USD. Do you know that?
I did not realize that.
So
But thank you for that.
there we go.
Okay, so here it is. Here, got to 50% also in this one, same sort of thing. And we're pulling back here. So this is really the action of the New Zealand dollar itself. More leverage would have been against the Japanese yen. But what we've got here, and I keep drawing your attention to it, I've got this big cigar across the top here, which is from 2016 to 2018, all those highs in there. And we reached that level there. And so it's not surprising that it's stalling at that level. It's a significant resistance level. This is bullish, but it's hit a significant level. So I think we're in for some consolidation in this, and this one will go off our radar a little bit as it consolidates around this high. One day I might be saying we're through the high now and it's blue sky ahead, and we're off. But at the moment I expect it to have trouble breaking through this significant level here. So if you have been using the New Zealand dollar as your best currency versus the US dollar to make the most of your money, and being in that, I think that it's time to ease off on that focus there while it struggles with that high. Thanks for that, Tam. Sorry, I'm ticking the wrong thing. Just very quickly, New Zealand dollar and South African rand and Mexican peso, two similar stories here. They were also leaders, best ones to participate in if you hated the US dollar, but that's over now, and we talked about this before. It came to rest in this big consolidation here, and it's bounced, and I think it's going to consolidate again around this level here, the 1450 level. This is a very significant 2018 through to the beginning of 2020. We traded in a relatively narrow range. That is a very significant support level for the US dollar against the rand. Mexican peso, it's expressed the other way up, but we've got the same, it's expressed as US dollar, so there's a falling US dollar here, but once again, come down to an even more significant cushion mattress, if you like. It's fallen into the mattress here, and here it is from 2017 right across here. We're at it. I think the potential for our performance from the Mexican peso is really blunted completely by this. So it's reached its floor, I would say. So this would probably go off your radar for a bit now. Okay, so now Bitcoin. We're looking at the weekly chart of Bitcoin. I've got my labeling up here. A is the beginning of the move. B is the first impulse move. C is the pullback in at the beginning of 2019. And so adding the length of AB to C gives us this Fibonacci projection here. On the way at 50%, we had this series of tops in here, which were troublesome for the market. It broke that and then released an enormous amount of energy. Sailed through the 100% level, that's the first D there, and then now it's got to 161.8%, where it seems to be consolidating. If it goes from 100%, it often goes straight to 161.8. So what about the shorter term for it? So what this is, that consolidation at the 161.8% level, and it is I would say a symmetrical triangle. And now symmetrical triangles are notoriously unreliable as to the direction of the breakout. The angle of the power of the bears is pretty well the same as the angle of the power of the bulls. Bulls and bears pushing against each other, doing a struggle between each other, and it's really you can't say one is stronger than the other, and we're right in the middle of that triangle right now. But when we look at the height of the triangle here, this is about $8,000 here, and so the breakout, when it comes, the breakout on the upside is at 38,500. A break of that would be very bullish, but that's a long way above us. 34,000 at the bottom, round about here is the likely place on the downside, would be very, very bearish for a move of about 8,000 after that. But which one, I cannot say at the moment. We're in the middle of a neutral pattern, which is indicating an explosive move when it's broken out of it. Marginally, I'm more bullish than bearish, but I'm not strongly more bullish than bearish. The reason being is the underlying trend is so strongly bullish, but this could also be a top. So I'm open-minded about that. I'm not going to say it can't be a top or it must be a pause, either of those things, but I know where I can make a decision. It is here and it is here. It's not here, and here it will can continue its consolidation. Okay, moving now to commodities. So let me go to gold.
That's US 500. We can see there, Trevor.
I'm just changing it to gold.
Actually, Trevor, we've had a request this week as well to take a look at silver if you've got time. I'm not sure if you were planning on looking at silver.
Yeah. Okay, all right then. And also the gold-silver ratio as well. But this is what dominates my thinking about gold, is that we're in a bull market for gold. We've got rising lows still intact. Of course, we've hesitated this year in it, and now I'm drawing in this this downward sloping flag. I think this is a flag pole and this is a flag. And we're in the middle of the flag right now. So we've got lower highs and lower lows here. But I think all this adds up to potentially a very bullish pattern. The breakout point is more likely to break to the upside than the downside. It's quite unusual for these sloping patterns to break down. So I think it's going to break to the upside. I've made it dash because it's very unclear exactly where the level is, but it's about $1,900 there. So I think that we can continue to grind lower. We could even make a new, we could even break this low here and still can be contained by that declining flag. But I'm looking for, I must get rid of that line now because that is clearly broken. I'm looking for the market to resolve itself in the longer term to the upside. So I would keep my powder dry personally on this, unless you're a trader in which the oscillations are very good, big moves, you can make money from that, sell strength, buy weakness. But for the longer term, I think that you should be looking to buy it lower down than we've got now. Before I go to silver, let me go to gold divided by silver, the ratio here. So this is gold divided by silver. Rising here is gold improving over silver. So this year, basically, we've gone a little bit against the trend, which has been that silver has outperformed gold, and recently, in recent weeks so far this year, gold has outperformed silver. So let's have a look at silver. Not saying I'm abandoning silver by any means at all, but here is silver. Silver is not such a good looking chart, and I guess that's the reason it's perhaps not so looking so good as gold. So here's the silver weekly. You know, it's ranging, it's coming down to significant support here at $24, and that should hold it, and it should continue to consolidate in here, but it isn't yet forming a particularly bullish shape the way that I think that gold is doing. So here's the daily chart of it again. I'll take this line off now because it's really gone. We have got a new downtrend line, which I'll draw in carefully there, which we need to break to the upside. But it's this very short-term pattern is rather poor, isn't it? Big move down there, consolidation here now, and quite vulnerable to legging lower, maybe back to 23 in the short term here. So of the two, my favorite is currently gold again, not silver as it was up until recently. I hope that helps. Brent crude, having hesitated at 55, which we had predicted. And why did we predict it? Well, it's because of this big consolidation here. It's another one of my cigars over the consolidation here. So we saw that from this point here, that it looked as though it would go quite quickly to the 55 level, which it has now done. Now it's consolidating, but all this still looks bullish to me. The RSI is still rising. I know it's high, but it's still rising, and the MACD is still powering ahead. Here we've just on Friday we had quite a severe sell-off, but I see that as a correction in the market. There is a correction as opposed to a change in trend. There is $2 down. There's probably enough consolidation to halt this fall if it develops into anything. But I see it as a correction in a rising market, therefore a building opportunity rather than a change in the trend. I don't think it is a change in the trend, but it's been caused by the hesitation at that big cigar of consolidation there. So it's not at all surprising that this is happening. Okay, let me move now quickly to the stock indices. I'm sorry, I'm overrun very slightly. The S&P, the US 500, sorry, for some reason that's gone. So here's the US 500. Let's go to the weekly first of all to get the context that this is new highs here. It's still very, very powerful. We have got a bearish divergence in the weekly, and we mustn't ignore that. Look at the last one we had here. What happened there? Look at this one here as well. So here it is. We've got a warning. It's not going down. It's not even looking weak at this point, except that this is loss of momentum in here. So I'm very worried about this. We're also, compared to the difference between the price and its 200 day moving average, repetitively when we've got to this extreme reading, we've had these types of big moves, like 5% moves, sudden moves, and these happen suddenly. You know how quickly they happen. I think I'm worried. To tell you the truth, I'm worried. Even though this market, if you look at it just like this, it's strong. It is strong. It definitely is strong, but it's now extremely vulnerable to significant. By that I mean a 5% plus type moves downwards, and so I'm very cautious indeed about the S&P. The FTSE, of course, if that were to happen, it would affect the FTSE as well, but the FTSE is weak on its own. So here it is on the daily, but I want to just show you the weekly. I always want to look at these big picture moves. So we broke out this flag here. I measured from the flag pole, taking it upwards 100%, which is still my objective, is the big cigar up here, consolidation here, and I think we're on our way to that. Clearly, in recent days, we've weakened, but I think that is a correction, and it will find its footing. And I think around about here, 6,650 sort of area around there will be sufficient to stop the fall and resume the advance, and this pattern of higher lows will resume again. And so many people, I think, will look at this as an opportunity. I just want to indulging you for a couple more seconds, talking about the stock market itself. Is I've been talking about the banks, and last year we were talking about the banks and who had been so out of favor. Well, now the banks are now really fantastic and leaders. Look at, there's Bank of America there's JP Morgan here, and this also spreads through to Europe as well, being led there by those. I just wanted to look at Amazon, and Amazon is forming a little this triangle here, symmetrical triangle, in with a flagpole, if you like, which is bullish, which normally you would say on balance we're most likely to break out of this to the upside. But we are challenging the low of this here, and I'm really worried with that in the back of my mind about this sell-off. And we've got some other big tech stocks, the leaders, S&P leaders, which have got charts like this, looking very vulnerable. Look at Facebook, which has already broken out of its triangle and collapsed like this. Imagine that the other big ones do too. That'll be it for the S&P if it happens. So let me record the fact that in this great bull market, which superficially looks like it's going on forever and ever, I'm really very worried at this point that the market is vulnerable to a significant drop, not just a correction, but more than that. Not just a small correction, but more than that. All right, my friends, thank you very much indeed. Have we got any questions, Dan?
Trevor, no, we don't have any more. Thank you. You've answered all of them, I think, this week very well. Yeah, if anybody does have any extra questions for Trevor that they think of, I don't know, later on this week, they can always email us at webinar@myfxchoice.com. Also, if they want to watch the webinar again, or if anybody arrived late and wants to go back to the beginning, we'll be posting the full video of this webinar on our YouTube channel. So basically that's it. Join us again next week, same time, same place as always. Trevor, if you have anything else to add, please do so.
No, thanks very much everybody for honoring me with your time. Please tell your friends about the YouTube channel, the FX Choice YouTube channel, and follow, if you find this helpful, follow the technicals with me as the markets evolve. We're all in it together. I'm not God. I don't know the future, but I can see what I can see, and I'll try and tell you what I see. Thanks very much indeed, Dan, for hosting so well, and for all of you, may the trend be with you.
Thanks, Trevor. Bye, everyone.
Bye-bye, everyone.
Bye-bye.